This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Shopping list. The third quarter is in the books. It was one of the worst in years. So what does it mean, if anything, for the fourth? And how should you invest your money?
Down to the wire, the House passes a short-term funding bill that averts a government shutdown. For now.
Under the hood, why a growing number of investment choices in your 401k may look like mutual funds, but aren't. All that and more tonight on Nightly Business Report for Wednesday, September 30th.
Good evening, everyone, and welcome. A big finish to what was the worst quarter since 2011. And for investors, it was a volatile and turbulent 3 months. During that time, investors saw all three major indices enter correction territory and witnessed an intraday plunge on the Dow of more than 1,000 points. For the quarter, the Dow Jones Industrial Average fell about 7.5%. The Nasdaq fell about the same, and the S&P 500 lost 7%. Energy, materials, and healthcare were the worst performing sectors, all down double digits. The utility sector was the only group to finish higher in the quarter, with a gain of more than 4%. But on what is historically the worst day of the year for stocks finished with a big bang. The Dow soared 235 points to 16,284. The Nasdaq gained 102, and the S&P 500 rose 35 to put it back above 1,900. Dominic Chu now with a look at what may lie ahead for the market and your money.
If you're confused about where the market's headed, you're not alone, especially after the kind of volatility we've seen. Economically sensitive sectors like energy and raw materials performed the worst over the past month and the past quarter, while dividend-paying sectors with less economic sensitivity performed well, like utilities and consumer staples. So, can history give us any insight into what we can expect as we approach year-end? Many experts say that on average, the fourth quarter is a seasonally strong time for stocks. But what about the years like this when the market's already looking weak as we approach the holiday season? The analysts at Bespoke Investment Group took a look at the 30 times since the S&P 500's inception that we've been negative on the index heading into the fourth quarter. It managed to post gains a little more than half the time, but the average return was actually negative by a little over 0.5%. Many experts think there are reasons to be more cautious these days.
Biggest concerns, I think, short-term are global growth, disinflation, and then earnings momentum. On global growth, we're seeing slower growth. Disinflation's coming through because of energy, so lower energy prices are ultimately good for consumption, but it's a lower inflation dynamic. Much more importantly, I think it's the earnings dynamic, and earnings right now have an awful lot to prove in the third quarter, the fourth quarter, and then the outlook for next year.
But it also means that there may be opportunities to find attractive investments at lower prices, and that's what many portfolio managers are trying to do.
We like housing and all the kinds of things related to housing. We're buying Lowe's right now. We have always owned it or have owned it for a long, long time. And we're adding to it because it hasn't run up quite as much as the others. And we like the drug distribution sector.
The takeaway here is that the jury's still out. There are plenty of stats and supporting evidence for both bulls and bears. But will there or won't there be a Santa Claus rally this time around? For Nightly Business Report, I'm Dominic Chu.
Ho, ho, ho. And now our guest has stock picks that he says could make you some money in the fourth quarter. He's Michael Tyler, love the last name, Chief Investment Officer at Eastern Bank Wealth Management. Michael, good to see you. I'm just going to call you Tyler. No, I'm going to call you Michael. Do you expect
I knew you'd like it.
Do you expect a rally into the final quarter of this year? And if so, why?
Well, I think the answer is yes, I do. And the reason is that we're at an inflection point. Right now, we're all still terrified about third quarter earnings. But let's face it, when this is the quarter when we're seeing the biggest impact year on year from lower oil prices and the biggest impact year on year from a stronger dollar. And those two things alone knocked about 8 percentage points off of S&P 500 earnings this year. So looking ahead to next year, and October is when people start rolling their estimates forward and start thinking about next year's earnings, we're not going to have those headwinds. So I think that the overall opportunity set here, we're looking for an improvement in earnings because you're losing that huge headwind.
So let's talk first about sectors that you like and then Ty and I'll drill down on what stocks you like, particularly in those sectors. So give me the 3 sectors that you think will probably perform well as we go into the end of the year.
I think you're looking at a wide array, but in particular, I would highlight energy, believe it or not, which has really gotten whacked big time. Oil's down about 24% year to date after a horrible year last year. And I think it's getting to the point where you have to look at value there. Second, I'd look at some technology companies. And third, I'd look at some financials. In each case, you're looking at positive seasonal trends, and you're looking at the potential benefits of a rate hike as well.
All right, let's drill down a little bit farther. Within those sectors, give me a buy list for the fourth quarter. You go first, dealer's choice. Which sector do you want to go with, and give me a name or two?
I'll give you a couple of names in each. In technology, we really like PayPal. It's a relatively new company, just spun out of eBay over the summer. It's unloved. It hasn't yet found an analyst following to speak of, and people really aren't sure what it's going to be able to do. But we're pretty confident that they're looking at about 20% earnings growth, and it's only trading about 20 times earnings, which for a tech company with that kind of growth, with tremendous appeal from the Vimco and from the Braintree products among the millennial set, I think that one's set to go pretty well. You can shift over then to the financial sector, where we think that the banks and the investment banks have a good opportunity here. Number one, if we're right about the market, they'll see some trading gains. But number two, if and when the Fed raises its rates, I think there's a benefit to the large banking sector as well. So we'll look at companies like Bank of America or Morgan Stanley as potential successes there in the fourth quarter. In energy, I think you go with the integrated oils for 2 reasons. Number one, a company like Chevron, you've got a 5.5% dividend yield on a cash-rich, very healthy company, despite the fact that oil prices are way low. That's a very appealing floor to valuation, in my opinion. And on top of that, this is the time that they're going shopping, looking for some interesting things to buy on the cheap. So I think that they can do some very accretive business here, building up their portfolio.
All right, from one Tyler to another. Michael Tyler with Eastern Bank Wealth Management. Thanks for being with us.
You bet. Thank you.
The House of Representatives late today approved a short-term funding bill to avert a government shutdown, sending it to President Obama to sign into law ahead of the midnight deadline. Eamon Javers has been following all the drama for us from Washington. So, Eamon, now the clocks are kind of reset until December 11th. But why that date? And who's going to be in charge of the House next time we have a government shutdown crisis?
Yeah, Sue, that's the date they agreed on. This was a bipartisan vote today to kick the can down the road to December 11th. In the end, we saw more Republicans voting against it than voted for it, but a bunch did vote for it. All the Democrats voted for it, so that was enough to pass this measure and kick the can down the road. Ultimately, though, it's going to be up to the next Speaker of the House to figure out how to get this measure through once more in a very fractious Republican conference that doesn't appear to be in the mood to cut any deals whatsoever, even with their Senate Republican colleagues, let alone the President of the United States, who they've all campaigned against.
So is there any likelihood that Mr. Boehner, in his remaining month as Speaker, will be able to go over the head of his caucus and do a funding bill that goes beyond December 11th and resolve some of those other big items, including the debt ceiling, forging a coalition of more moderate GOP members and Democrats?
You know, anything is possible, and what we've learned in the past week is that that is really true. I mean, the Boehner resignation surprised a lot of us who watch Congress, but at the end of the day, Boehner is not a going rogue kind of a guy. I don't see that in the cards right now. The question is, will they be able to come up with some kind of a deal between House Republicans and Senate Republicans that they can live with and then get the president to sign on to it? That's just an unknown, and of course, we've got the debt ceiling, we've got the Export-Import Bank, we've got a highway bill. We've got a bunch of other very contentious spending-related issues, all of which the House Republican core conservative group has vowed to fight on. And so how they resolve that is just anyone's guess at this point.
And what about the president and this new team that he's going to have to deal with? What does that landscape look like to you?
Well, the president came out after Boehner announced his resignation and said, you know, look, ultimately John Boehner is a good man, he's a patriot, but he's dealing with a conference that doesn't know how to negotiate. And I think the president's patience has been relatively worn thin here. I mean, he thought he had a difficult time dealing with John Boehner. Just wait until he deals with the next guy.
On that optimistic note, Eamon, thank you very much. Eamon Javers in Washington.
And now to the economy and the labor market. The private sector created 200,000 jobs in September. That was slightly better than estimates and the best reading in 3 months. The job gains were across sectors, with increases reported in construction, trade, transportation, and utilities. This report on the private sector comes 2 days before the monthly government employment report is due out. The Federal Reserve, of course, watches the labor market very closely as it decides whether to raise interest rates for the first time in nearly a decade.
And while the labor market showed some gains, manufacturing in the Midwest contracted this month. The Chicago Purchasing Management Index fell to its weakest level since May, as the strong dollar and weak overseas demand pressured exports.
The head of the International Monetary Fund is concerned about the global economy. Christine Lagarde calls the global growth rate disappointing and uneven, and pinned her concerns on the prospect of rising interest rates in the U.S. and a slowdown in China.
Well, there is recovery, don't get me wrong, but it is definitely slowing down, and it is less than the recovery we had last year. And we don't forecast next year to be much more than what we eventually end up with this year.
Lagarde says the risk of low growth for a long time, something she calls the new mediocre, looms closer.
And the World Trade Organization has cut its global trade forecast. The group says world trade will grow by about 3% this year, and that's slightly lower than previous forecasts. The WTO says that number could be cut even further if China's economy continues to slow, if the refugee crisis in Europe grows, or if the Federal Reserve raises interest rates. Still ahead, why UPS sees big returns in a sector that touches all of us.
UPS is making a big bet on the healthcare industry as part of its long-term strategy. The world's largest package delivery company opened a new distribution center in New Jersey dedicated to the transportation of healthcare-related products, everything from medical devices to specialty drugs. And as Morgan Brennan explains from Swedesboro, New Jersey, UPS sees big money in delivering these time-sensitive and sometimes life-saving goods.
Pharmacists, high-security storage areas, temperature-controlled air freight containers. This is UPS's Louisville, Kentucky healthcare hub, one of 50 specially designed warehouses, catering to shipments of medical drugs, surgical devices, and biologics like blood and DNA samples. This may look like an ordinary part of the warehouse, but it's actually a 0-degree Fahrenheit freezer where temperature-sensitive medical supplies are stored before shipping out to hospitals, research facilities, and other kinds of laboratories. UPS is best known for delivering e-commerce packages, but the shipping giant has also been building out a network dedicated to these time and temperature-sensitive, highly regulated healthcare products that need to move carefully around the globe. While the company doesn't disclose the financials of this business, it does say it's a fast-growing revenue stream in a market it pegs at $70 billion globally and counting.
Healthcare, by contrast, is a fairly stable throughout the year in terms of the business. The investments that we've made in healthcare logistics return fairly good margins and fairly good financial returns to the company pretty much throughout the whole year.
For medical device company Exact Sciences, UPS developed plans to ship its Cologuard product, a screening test for colon cancer that ships from UPS's warehouse to patients' homes and then onto laboratories.
Time is of the essence here. So they have a 3-day commitment on the outbound leg and an overnight commitment on the inbound leg of the shipping. And that is really critical. It's really changing the whole paradigm about colon cancer screening, and UPS is right in the middle of it.
And UPS isn't the only one collaborating with healthcare companies. FedEx and DHL have made significant investments in their healthcare supply chains as well. Experts say healthcare logistics is growing at a faster rate than GDP, driven in part by increased regulations.
The medical profession is focused on reducing cost of the services, and as a result, the cost of goods and logistics that tie in, which is where UPS, FedEx, DHL are involved in moving, is a smaller percentage and creates greater opportunity for them to support the profession.
One such opportunity is here in Swedesboro, New Jersey, where UPS has just opened a brand new facility exclusively dedicated to high-value medical devices, including equipment packed on a Wednesday for spinal surgery in hospitals on Friday. For Nightly Business Report, I'm Morgan Brennan in Swedesboro, New Jersey.
Less than half of all consumers have the new chip credit cards. That's according to a new survey. As we've been reporting, beginning tomorrow, new, more secure credit cards will become the standard across the country. These credit cards have chips in them, so you'll no longer swipe. But according to creditcards.com, only 40% of consumers have the new so-called smart cards in their wallets.
And that's only one of the problems. While the chip-enabled debit and credit cards are hailed as an answer to counterfeit card fraud, they can only prevent fraud if the business or retailer has the systems to read the cards. And while retailers are getting on board, gas stations and ATM operators have up to 2 more years to be compliant, and that leaves plenty of time for criminals to steal your information. Mary Thompson reports.
Chip-enabled cards are said to be safer, but they still have a soft spot, those magnetic stripes on the back. The stripes carry information a criminal can steal, taking a toll on card issuers.
The cost in the industry, as it relates to card fraud from skimming, is reaching over $3 billion.
At ATMs and gas stations, this information is stolen by skimming. Criminals put illegal devices in a pump or ATM's card reader, and the device scans information from the mag stripes. NCR's Owen Wild says criminals then put the information to their own use.
Criminals then are using that data either to clone counterfeit cards or to use that card data to make card not present transactions using your card information.
A chip card will eliminate counterfeit card fraud for in-person payments, but only if the retailer or business has a system to read the chip. If not, the system reads the mag stripe, which again can be easily counterfeited. To push adoption of chip card technology, come Thursday, retailers will start carrying the cost of a fraudulent transaction if the client presents a chip-enabled card, but the retailer or business doesn't have the system to read it. Gas stations start assuming liability for these transactions in 2 years, and for ATM operators in 1 year if they use the MasterCard network, 2 years if they use Visa. With the cost of making the pumps and cash machines chip-enabled ranging from a couple of $100 to a couple of thousand, experts expect a slow transition, meaning criminals will target these machines, creating pain at the pump for gas stations and unwanted withdrawals at ATMs. For Nightly Business Report, I'm Mary Thompson.
Pfizer hikes its full-year outlook, sending shares higher, and that is where we begin tonight's market focus. The drug maker upped its full-year revenue and adjusted earnings forecast. This is the firm recently acquired its smaller rival, Hospira. Shares of the Dow component were up 1% to 31.41. Twitter's search for a chief may have come to an end. According to Recode, the social media's founder, Jack Dorsey, who has been serving as interim CEO for the past few months, is expected to be named CEO. Dorsey will continue to run Square, which is a payments company he also founded. Shares of Twitter rose more than 5% to $26.94. Synaptics, a company that makes touchscreen technology used in phones, reportedly rejected an offer from a Chinese investment group. According to Bloomberg, that bid valued the firm at almost $4 billion. Shares popped 27% to $82.46.
And Western Digital, on the other hand, accepted a bid from a Chinese firm that plans to take a 15% stake in that data storage company. The stock rose 15% today to $79.44. Meanwhile, Paychex results beat estimates on both the top and bottom lines. The company saw its earnings rise more than 20%. Growth in the firm's payroll and human resources services units helped results. Shares were 3.5% higher at $47.63. Mixed results from Costco to tell you about. The warehouse retailer easily beat estimates on the bottom line, but revenue slipped below consensus, which the company blamed on lower fuel prices and a stronger U.S. dollar. The stock was up a fraction nonetheless to 144.57. And PBF Energy is buying one of ExxonMobil's refineries out in California. The deal has a price tag of about $500 million. Shares of PBF popped in initial after-hours trading. During the regular session, the stock was up more than 2% to 28.23.
A growing number of investment choices in your 401k may look like mutual funds, but they're not. Collective investment trusts now account for about $2.5 trillion, or 16% of 401k style plans, up from a little bit more than $1 trillion just a few years ago. They are similar in some ways to mutual funds, but very different in other ways. So, what do you need to know? Here to tell us is David Blanchette. He is the head of retirement research at Morningstar. Good to see you, David. Welcome back.
Thanks for having me.
Let's start, first of all, with basically what these CITs are, these collective investment trusts.
Sure. So they're a lot like mutual funds. I think the biggest difference for investors is that there's no ticker. So you just can't go on Morningstar.com or another website and figure out, how the fund invests and what its performance has been.
Are these operated by mutual fund companies? Are they operated by banks and trust companies? And does therein lie the sort of regulatory and structural difference?
So they're operated by banks, and as opposed to being SEC regulated, they're regulated by the OCC, and so that's why they have different structures.
What about in being insured? What about fees? I would assume that some of these 401k plans want to use it because the fees may be lower, but is that actually the case?
It really is, and so where you see CITs used most often, they're in about 60% of 401k plans today is larger 401k plans, because the average CIT costs about 20 basis points less than its mutual fund comparative. So if you're a really large plan, you want to get a low-cost option for an index, for example, a CIT could be the way to go.
How common are they? How many 401ks offer them?
So about 60%, and they are becoming a lot more common because I think that more and more plan sponsors are focused on reducing plan costs, and CRTs are one way to do that.
All right. Now, one of the questions that I have is, if you can't just punch in the symbol for it, where do you find evidence of their performance and/or their track record, or both?
So, it is more difficult. I think that if an individual wants to know about their past performance, usually there are going to be fund fact sheets that talk about the performance of the fund, its top holdings, et cetera.
Can I get daily pricing on these things?
You cannot. They have to be valued at least quarterly, but you won't see daily pricing because they're really only utilized inside 401k plans, but most plans or most CITs should have daily pricing.
So, excuse me, if I go on my 401k website, I may be getting a price or a value on that particular fund that could be 3 months old?
Right, so I think where you'd see that most likely is in the more illiquid types of CITs, like, for example, direct real estate. So I think that if you're buying a liquid CIT that includes things like U.S. large cap stocks, that won't be a problem at all.
All right, thank you so much. Appreciate it, David. Good to see
Thanks
you
for having
again.
me.
David Blanchette with Morningstar.
And coming up, there's a new SUV on the market, and it's like nothing you've ever seen before, including the price tag.
Here's a look at what to watch for tomorrow. Automakers will report their car sales for September. Another read on the labor market with a read on the number of Americans who filed for unemployment benefits. The ISM Manufacturing Index is out, which is an important read on economic activity. And that's what to watch for on Thursday.
College athletes who are looking to get paid for their participation experienced a setback today. A federal appeals court struck down a plan to let schools pay players up to $5,000 a year. This as athletes have lobbied for financial compensation, and as college football and basketball have generated millions in revenue through TV deals and merchandise sales.
Ford is issuing 6 separate recalls today for nearly 400,000 vehicles, including vans, cars, trucks, and SUVs. The automaker says a small number of accidents have been reported related to issues with its cars. The vehicles involved are the company's Windstar minivans, its E-Space Mercury Mariner, and its F-150 truck, among others.
Tesla is hoping X marks the spot with its latest vehicle, the Model X. After 2 years of delays, the money-losing automaker delivered the first versions of its luxury electric SUV last night just outside San Francisco. Phil LeBeau takes us for a ride in the new car with doors that have everyone talking.
Welcome everyone to the Model X launch.
It's not your typical luxury SUV. Then again, Tesla's not your typical auto company. The Model X is an electric SUV with a base price of just under $80,000 and Falcon Wing doors that Tesla says will make it easier to get into the second and third rows, even in tight parking lots. For Tesla, building the Model X in the same plant as its only other vehicle, the Model S, will show if it can make the jump from being a niche automaker into one with multiple models, facing numerous challenges.
Well, if the Model X launches well and gains great consumer enthusiasm, consumer satisfaction, it certainly bodes well for other Tesla launches in the future.
Fully charged, the Model X can go up to 250 miles, and yes, it does come with ludicrous mode, meaning on some models, you can go 0 to 60 in 3.2 seconds. The future is finally here for Tesla and its customers who have waited and paid a hefty price for the Model X. Phil LeBeau, Nightly Business Report, Fremont, California.
I just think more things should have come equipped with a ludicrous mode. I don't care what it is. I just want a ludicrous mode.
You just want a ludicrous mode.
Coffee maker, my computer.
132K, you should get a ludicrous mode. Okay, that does it for Nightly Business Report for tonight. I'm Sue Herrera. Thanks so much for joining us.
And I'm Tyler Matheson. Stay ludicrous, everybody. Have a great evening. We'll see you tomorrow.